Hello, I'm Juliette Sarli. In this week's IG Macro Intelligence, we take a look at the AREIT sector. Improving economic conditions and expectations of further interest rate cuts has driven a notable recovery in the S&P ASX 200 AREIT index. It surged more than 13% in the June quarter, taking its annual gain to almost 12%, virtually in line with the overall ASX 200. The June quarter uptick sparked by diminishing macroeconomic concerns since the Liberation Day fueled April slump and a more favourable investment climate. Data from Cromwell Funds Management show Goodman Group led AREIT gains with a 21% rise in the June quarter, nearly recouping 2025 losses. And residential developers benefited from widespread house price growth, boosting stocks like Cedar Woods, which rose more than 35% in the quarter. Michael Wayne from Medallion Financial Group says of the AREITs who've reported earnings so far this reporting season, the outlook is solid.
Seen a couple of REITs either come in line or exceed expectations. So we've seen the likes of, Centuria Industrial REIT, Charter Hall, Long Whale REIT perform very well. But yeah, so far we're off to a good start.
Centuria Industrial REIT focuses on industrial properties in the real estate market and is Australia's largest listed pure-play industrial fund. It reported a 25% rise in full-year revenue, while net profit exceeded $133 million. The trust also announced a $60 million share buyback, reflecting strong performance and investor confidence.
The real catalyst for the stock is looking into the future. So as mentioned, we think there is fairly significant under-renting across the CIP portfolio. We think we're about 20% under-rented on average, and we think that will lead to some very, very significant earnings growth into the future. The other aspect of our result, which we were very happy about, was the sales that we achieved through FY25. So we sold 4 assets for a combined $140 million in FY25, and that was at an average 12% premium to book value. So considering CIP is trading at about a 15% discount to NTA at the moment, that disconnect to the divestment metrics that we've been achieving is really significant.
Shares in Centuria Industrial REIT hit a 10-month high in the wake of its results and are up almost 17% year to date. ASX TradeWatch data showing shares in a medium-term rally, with the 5-day moving average above the 50-day and the 20-day moving average also rising. And analysts are positive on its outlook. The average broker recommendation a buy, according to Refinitiv, with a target price of $3.59, suggesting a further 8% rally. Bell Potter analysts have lifted their price target on the stock to $3.65 in the wake of the results, highlighting the $60 million buyback, which is equivalent to around 3% of shares, as a positive momentum signal. Dexus Convenience Retail REIT owns high-quality Australian service stations and convenience retail assets. It posted a modest drop in revenue and funds from operations for the year to June 30, with revenue from ordinary activities down 2%. However, net profit jumped sharply from $3.4 million in full year 24 to $39.4 million, and its market capitalisation rose 12.6%, signalling strong investor confidence despite softer operating results.
What we're looking to do is really increase the weighting to highway sites. They offer really strong traffic volumes, and at the end of the day, that's what helps underpin profitability of these sites. We're currently demonstrating through one of our major developments at Glasshouse Mountains, which is on the Bruce Highway. That's the main commuter link between Brisbane and the Sunshine Coast. We're investing heavily in the redevelopment of that site to cater to really strong traffic volumes, really large tracts of land that can help evolve the shape of the product offering in a way that lends itself to increased customer visitations and dwell times. So at that particular development site, we will be delivering a brand new Viva Energy service centre, but also 4 additional quick service restaurants in the form of Hungry Jack's, KFC, Guzman and Gomez, and McDonald's. And so that's a good example of really strong, well-located highway sites with very strong customer visitation prospects.
And ASX TradeWatch data shows shares in a near-term uptrend, confirmed by the 20-day moving average rising, which implies investors do see further upside for profit. Analysts remain bullish on the stock, the average target price of $3.25, suggesting it can rise another 5%. Well, Goodman Group is a major component of the 8 REIT index and is due to report later in August. Its third quarter operational update indicated strong performance with a focus on logistics and data centres, while it also recently established a Hong Kong data centre partnership worth more than $2.7 billion. And as more employees return to the office, analysts say the outlook for the office sector is improving and should bolster demand and occupancy rates in the near future. Analysts expect the A-REIT sector to gain from anticipated interest rate cuts in 2025, with supportive macroeconomic trends and sector-specific gains pointing to a favourable near-term outlook. And that is your IG Macro Intelligence for this week. We'll see you next week.